enhance diversification, to be able to enhance returns, then alternative investments play a very huge deal. And then when we think about alternative investments, we sometimes only just think of the asset side, but alternative investments is fueled by the issuers of alternative investments. Who are the issuers of alternative investments? We're talking about businesses seeking capital. We're talking about any of those issuers who want capital. And who are some of these people that want capital? These are issuers who want capital other than the traditional capital type that banks provide. So they're seeking other types of capital arrangement outside of the banking arrangement to be able to fund businesses, and those are what produce alternative assets.
Businesses have come to realize that, especially in their early growth stage, they need what Angus likes to call patient capital. That's what some of us call private equity or private credit, that allows them to make those long-term investments, those investments that usually come before the cash flow. Typically see that in infrastructure, where you have to build and then long after you get the cash flow. And so the private credit or private equity, a form of what we call alternative investment, which none of it is new. These are alternative investment is really just a new phrase we've come up with. But private equity is something that has been around for as long as finance has been around. And some of the trends we're seeing is that businesses need that patient capital to actually expand their operation, to pursue investments that take long to generate cash flow. And we are in Jamaica, we're actually seeing more private equity funds emerge, more private credit businesses emerge, because we realize traditional financing does not offer the flexibility, the patience businesses need, when they want the capital to be invested in infrastructure, asset type that will not generate cash flow in the immediate future.
And supply chain finance here in Guyana is really an area that will get a lot of focus potentially, because the main issue with companies trying to finance themselves is just access to capital, right? And at what price? So if you have large international companies that you are providing services and products to, have an opportunity to leverage the credit metrics of a buyer versus your own credit metrics. So there becomes a pricing arbitrage as well for that cost of capital.
You just heard Dean talk about some very large companies, a lot of large companies on the panel behind us. Excuse me. So alternative investments only for the big guys, or how can small companies or startup companies get access to this? How is it just for the big guys, or is this available to small companies as well?
So that's a traditional misconception that's typically held by persons, that is only for the big guys. It's not only for the big guys on the investment side, and it's not only for the big guys in terms of the issuers of alternative investments. So let's start with on the investment side. On the investment side, alternative investments can be had and accessed by just about everybody. You don't have to have a high level of IQ to be able to do it, and you don't have to worry about managing it, and you don't have to worry about, my wealth or my money is not big enough to. You can access alternative investments to be able to complete your portfolio allocation. And one of the popular ways that everybody can access it is via mutual funds, via pooled arrangements, because pooled arrangements allow you to be able to access at different levels. So firstly, it's accessible by all, of course, assuming suitability for the portfolio. And then of course, typically, again on the asset side, you have the large institutions that make use of alternative investments, and to be able to solve multiple problems and to create multiple solutions and to enhance returns. And then with regards to on the issuing side, alternative investments is for everybody. So typically when we think about traditional financing from banks, the larger a firm may get, the bank may not be able to fully service. As well as too, sometimes when you are small, the bank may not be able to service your needs. And then of course, because of the level of the risk in the business, a bank may not be able to. So again, the alternative investments from the issuer side and persons seeking capital, it can be had at all different levels in terms of business size, and also too in terms of just businesses seeking solutions to certain structural problems that they may have within a business, they're also beneficiaries of alternative investments. So it's why I'm there, it's within everybody's reach.